Okay, folks, so we've been waiting for this inflation number to start coming back like I've been predicting, and we just haven't seen it that much yet, but the tides are turning today. So let's get over to the headline news that we have because we saw inflation on the producer side of the equation plummeting, and that's great news. We also have the unemployment numbers kind of going up. More and more people are filing for unemployment claims for the first time. So this is actually helping the markets right now because the reason being is in a normal market, this would be like, oh my God, what's going on? But in this type of market right now where we have Fed-induced inflation, it's nothing but good news. So let's go over to the markets. What I see on my screen right here is what you're seeing as well, is I'm a mortgage person. So I follow the mortgage bonds and bonds in general. So what you're seeing on your screen is what's happening to the mortgage-backed securities market right through these areas right here. And this is the 10-year Treasury. We're not really seeing any adjustments there. There's no news. I thought actually rates were going to get much, much better today based on the news that we have. So let's get over to some of the headlines that we have right here. Amazon stocks, whatever, but right here, U.S. jobless claims applications highest in more than a year. So remember the Federal Reserve kept saying is the next pain we're going to inflict is on the jobs market. We need more people unemployed. Well, they're getting their wish. Last year they said, we're going to take the steam out of housing, and they did just that. So this is basically what we're seeing right now, the jobless claims. But another area that we want to focus in on is inflation, because that's another piece of the puzzle that the Federal Reserve monitors. They have two mandates. One is to control employment. They want full employment throughout the whole country, as much as it could be. And they want price stability, AKA they want to take control of inflation. Well, they did a pretty crappy job at that. So we want to go in and see what's going on now based on all those rate hikes that they had in the past year and a half. That was, I'm still saying there's a couple of those that were unnecessary, but only time's going to tell. So let's get over to see. We saw yesterday's inflation numbers come in, and they came in really good. This is the consumer inflation. So year over year, the expectations the previous reading was 6. It actually dropped 1 full percent to 5. Okay, so that's great news on the consumer front. What we focus in on now is how much prices are rising on the producer side, because if producer prices are going up, the only way they can keep the same profit margins is to pass those high prices on to me and you, the consumers. So what do those numbers look like right now? Well, we go down through here. The producer price index, the previous reading was 0. They expected a 0.1. It actually came in negative. That's what they call sometimes deflationary. So I'm not going to say we're there yet, but this is actually saying that the inflation on the producer side is actually crashing. That's fantastic news. Let's get over to this caption here. If only the bond market. So what's happening right now is you see a disconnect right here. There's really nothing going on. And right through here. So let's read the caption that we get. So if you want information, alerts like this, subscribe to my newsletter down below, because you're going to get this. You're going to get a daily recap. You're going to recap it on Friday of the month, end of the month, and so forth. So it's free for you down there. So subscribe down below, and you're going to find a bunch of information down there that you can really use. So let's get over to the headlines that we have this morning, and you can see it right here. And it is hot off the presses, folks. If only the bond market cared as much about producer prices as it does the consumer prices. That's the conundrum, because if the market's really paid attention to it, if inflation on the producer side is going up, well, then it's going to go up on the consumer side. And unless otherwise, if that doesn't happen, you're going to start seeing stocks fall, because that's how you evaluate a stock or a company, is their profit margins. So if their cost of goods keep going up and they don't pass that over to the consumer, their profits are going to go, and then the stock's going to go. So what we're seeing right now is the inflation numbers are coming in really good, but a lot of the markets are missing the producer side of this equation. That's where it starts. So the latter has a fine showing yesterday, with CPI coming in right in target, with a big drop in housing costs. Now, that's another area we discussed yesterday. So if you missed that video, go back, because there was a lot of data that we covered yesterday. But today's drop in the producer prices is on another level. Headline PPI dropped 0.5 versus an unchanged forecast. More importantly, core PPI was down 0.1 versus plus 0.3 forecast. Okay, this is the first time it has been negative territory since the start of the pandemic. So 3 years ago. So this is fantastic news about inflation. Let's go over to the producer price index right here. This is actually from the government Bureau of Labor. And you can see, here's where we were on producer inflation back in March 11%. And that's when everybody's freaking. And that's when the Federal Reserve said, okay, we got to start cooling off the system. Now look at this. This is the fastest drop I've ever seen in my whole life. Okay, so we want to pay attention to this reddish or maroon color. You see it going from 11 to 8 to 7 to 6 to 5 to 4 to 3 to 2 to, let me go over here, down to 2, from 11 to 2. Okay, so that's fantastic news today. So what's this doing for mortgage rates and real estate? Is it making housing a little more affordable? Well, house prices are starting to rise up again, guys. But let's see what's going on with mortgage rates. So what you're seeing right here is the price of a mortgage-backed security bond. We follow this because it's the instrument or the biggest tool that you can use to follow what's going on with mortgage rates. So this is what's going on the price of a mortgage-backed security bond. All you need to know is if this number goes up, mortgage rates are coming down. You don't see a lot of ups over here, but you're probably going to start seeing them a little bit more going forward. So this is up 11, so mortgage rates are probably going to come down maybe 0.05. Let's see if they highlighted it yet. Nope, this is where we start today, so all the banks haven't reported yet. So this is a report by Mortgage News Daily on a daily basis. They give you the top 6 products people use when they're looking to buy or refinance a house. Let's take a deep dive today into the 30-year because people try to track this and say, every day when I come up with a report and I say, hey, rates are down a little bit today, we got the phones calling off the hook, people that we locked in saying, hey, can I get a better rate? It's like, well, you got a better rate than we're seeing today because the market fluctuates all day, every day. Okay, so here's where we were just back in, what is this, October of, I don't know, last year sometime. It was about October-ish, September, October. 737 where the rates are. Look, this is how much they move on a daily basis. They're all over the map. So please don't try to time this. Let us do that for you. So if you're in the market right now to buy a house or refinance, please reach out to us. We'd love to help. If you need to get pre-approved, and you just want to kick the tires to see, how much would I really qualify for? We'd love to help you. I don't care if you're self-employed, you're on a pension, Social Security, fixed income, whatever. You're self-employed, been only self-employed for a year, well, there might be a program out there for you. Or you need help finding a realtor. We offer a free service where we vet realtors in the area that you're looking to buy. It's free service. There's no obligations. We'll pick out the best realtor in that area, give you that information. If you want to use it, God bless you, take it and use it. But that is it for today, guys. Trying to do this as fast and efficiently as I can. If you have direct questions for me in regards to mortgages, real estate, stocks, bonds, and crypto, please join me at 3 o'clock Central Standard Time every day because I answer those questions live for you. So thanks a lot for watching, guys. If you find value in this, please don't forget to give us a thumbs up, subscribe down below, and hit the bell every time I post a video. You get an alert. And you guys helped me hit 25,000 subscribers yesterday. So kudos to you guys. I'll see you at 3 o'clock, folks. Take care.